Hello, and thank you for joining us at xm.com. This is the Daily Market Comment by Raf Boyajian. I'm Cristina Marujos. The unrest in China appears to be easing amid a massive police presence on the streets of major cities, but while the clampdown may be succeeding deterring protesters to come out in droves, a policy U-turn on zero COVID isn't in sight yet. Nevertheless, speculation is rife that authorities are working towards a gradual lifting of the heavy-handed restrictions, and this is encouraging for investors. A decision by the country's securities regulator to end the ban on equity refinancing for listed property developers further boosted sentiment towards Chinese assets, lifting the benchmark CSI 300 index by 3% at Tuesday's close. U.S. equity futures also headed higher, but shares in Europe were mixed. The sluggish performance in European equities is a bit surprising given the latest signs that inflation in the euro area may be topping out. The full flash estimates for the Eurozone are due tomorrow, but after yesterday's remarks by European Central Bank President Christine Lagarde, which were on the hawkish side, any euphoria about peak inflation is likely to be limited. Not to miss out on the latest wave of hawkish rhetoric, Fed policymakers were out in force again, throwing cold water on the notion that the tightening cycle is approaching its end. Further dampening risk appetite, Apple shares slid 2.6% on Monday on worries that the protests and lockdowns in China will affect iPhone production just as the crucial holiday season is about to start. However, risk sentiment can still improve more meaningfully this week as PCE inflation numbers and the November jobs report are due on Thursday and Friday, which may keep alive hopes of a Fed pivot if they disappoint. Also on investors' agenda is OPEC's monthly output decision on Sunday. There are some reports swirling that OPEC producers and their non-OPEC partners will consider a further cut in output amid the weak demand picture in China and recession risks elsewhere. Oil futures were last up about 2%, having brushed near one-year lows yesterday. In currency markets, the US dollar was broadly retreating from yesterday's highs and briefly slipped below 138 yen in European trading. The euro was back on the front foot today, while the risk-sensitive Aussie and Kiwi bounced back by about 1%. This was a Daily Market Comment. Thank you for watching at xm.com.